Hey, it's Merritt with S&B Futures. What a day in crude oil today. As you guys know, from time to time, we have conviction in what we say. Our pre-market prep that we put out, where we lay out our if-then scenarios and our general thoughts coming into the market as to what may unfold. There are days where, go back to a video we did a couple weeks ago where I believe the title is something like "See a Trend Day Before It Occurs." Well, today was yet another one of those days. So as usual, let's dive into our private Slack room here, take a look at what was said. Here we are, 9 a.m. Eastern, right at the pit session open for crude oil. So for crude oil, the overnight session broke and held above 53.30, which is bullish. This could be the start of a longer-term move higher in crude oil. But keep in mind, today is inventories and FOMC, so that implies we've got some headline risk. Be cautious. It could be a dud of a day, but overnight session, bullish. This could be the start of a longer-term move higher. Not just this could be the start of a longer-term move. Who knows what the direction is? Let's wait on FOMC to see what happens. No. This could be the start, before they open, of a longer-term move higher, one direction. This type of analysis is possible, and we're showing you day after day after day that we're not right all the time, but we have a pretty dang good hit rate, that our market framework, as we call it, does a very good job of positioning us to be in the right trades at the right time, to identify conditions that offer more above average opportunity or less than average opportunity. Very, very important. So Hypo 1 was to buy any pullbacks with favorable order flow as long as the market's above 53.60, which is yesterday's value area high. So we've got that hypo set right here on the market profile chart. You see yesterday's value area high, and then here's our green bullish Hypo 1, and I'll go ahead and tell you first target and stretch targets right there. There you are. Targets 54.30, 55.12 stretch. Hypo 2, we could turn cautiously bearish, not full-on bearish. We're not having multiple points saying the market could be heading for a medium-term downtrend. Nope. If we have to, we'll be cautiously bearish. If we hold below 53.30, which I have highlighted right here for Hypo 2, as further general rotational nature continues, as crude has been in for quite a long time in this area. And by the way, I'm already long here as I was typing this at 8:59, just seconds before the post there at 9 o'clock and 7 seconds. So let's dive into it. Interestingly enough, we still have arrows here and whatnot. I believe I redid them for talking with someone else, but they're probably the same. Where we discussed this was kind of a, get short into the close for that mean reversion into VWAP. And there were some contextual reasons for that as well. If you recall, 53.30s was our general area there. So essentially holding below this, and we were looking for the market to head lower. Well, guess what? The market just continues to chop around and hold this area overnight and begins to really head higher. Hopefully I don't misquote myself here, but I'm pretty sure I had the only bullish hypo yesterday was if and only if this market could really hold above this area. Otherwise, I was bearish this market. So overnight that changes. Just like we talked about yesterday and the day before, the continuity day to day between the levels that we're using, the key inflections, and watching as the market either butts up against it and holds, hint, hint, or wicks through it and rapidly rejects it, leaving behind excess. Very, very important principles. So continuity, market turns bullish overnight as we come into the open, and we're ready to go. This was an interesting high here, which we had talked about real time in the room. right at 54 even. You know, there were some big players participating there and kind of capping that early on. And it was a beautiful place to kind of take some profits as we spiked above that. If you were long coming into this market open. So I really thought either of these places here or here were nice little pullbacks to get involved in as we approach the pit session open, which is right here. This was even a beautiful stop run here. If you allow it to get through the level, see that there's no real selling behind this move, which was critical. Tape reading skills was critical to see that this was atrocious selling and the buyers snap right back in. Beautiful spot there. And then, you know, we're kind of approaching inventory. So once we got this pop to new highs, I believe that was pretty much it for that trade idea, given the high risk situation we're about to step into as we approach 10:30 and the inventories numbers comes out, where crude oil could spike up $1 or down up $1 if crazy news came out. So unfortunately, you just prudently can't hold through those unless you have considerable booked profits. You know, let's say that you're 80 cents in the money, 100 ticks in the money, a point in the money. You can consider holding into moves like that, in my opinion. So we were not, although we had booked several profits and did a really awesome job with that as we kind of approach the number. From there, we tag our first target, 54.30. But given that we just had inventories release and things are picking up, we know what? We know that this market has energy. We know that this market is ready to rock and roll and do some more damage. It's telling us both into the number and after the number that our Hypo 1 is playing out in a big way. So we can really go for this stretch target. And so beautiful little pullback here to get involved in, healthy uptrend intraday. We push through the 54.30s, but then we run into a problem, don't we? As we push fresh highs, for whatever reason, the buyers absolutely exhausted themselves. Perhaps it was less risk appetite overall in across asset classes as we approached the FOMC announcement. So for whatever reason, just a lack of really strong buying, and we did not end up pushing into that final target. We got pretty dang close. Quite happy with what we did get. I had several students. In fact, I was in a session with a student in real time. We were noting what was going on here and how if they had been long, they were letting me know that this would have been good signals to flatten it out at that point in time. If not, heck, you can flatten it out once this little attempt to maintain the uptrend fails. That's fine as well. Unfortunately, I apologize. I did not do an S&P hypo today. As you see, there is no post early this morning on the 30th regarding the S&P for me, so I'm not covering anything up. I just literally didn't do one today. I was so excited about the opportunity and the clarity of the vision that we had approaching crude oil today that when I have that, a lot of times I won't even open up another chart book with another market. I will hone in on what I call A++ opportunity and really give it my best there. And that's what I did today. So really the key takeaway here is something we've talked about several times now over the past few weeks of doing these recap videos, which is there is amazing potential for you with the right set of tools, the right way of analyzing markets, which you can find out about at smbfutures.com. But there is a way to really see what markets are up to. You can see where trend days are more likely. You can see where just choppier action is more likely. Doesn't mean it always happens, as we showed yesterday. We certainly didn't nail any hypos at all yesterday. But we kept ourselves out of trouble. We came back to live another day, to fight another day, however you like to say it, and we crushed today. That's what it's all about. quality analysis, putting ourselves in the best position to succeed, being in tune with a solid understanding and a clear vision of what the market is currently attempting to do, and simply going and executing a process well. We'll see y'all tomorrow.